We've got the market wrap in Shanghai with Wang Lihuan, Hong Kong with Mr. Hennessy, and Tokyo with Yoshida. Lihuan, it's a bloodbath in the Chinese mainland stocks with Shanghai down 2%. Tell us more about it.
That's right, Junfo. Mainland markets tumbled for another day today as investors sell their most loved stocks. The Shanghai Composite fell 2% to 3,564, while the tech board Chinex plummeted 3.4%. A-shares biggest listed from Kuichou Maotai investors are selling their shares at the fastest pace in 2 years. Maotai shares fell 5.1% today, taking its 5-day decline to more than 15%. Smaller baijiu makers Luzhou Laojiao and Wuliang Yibing are among the worst performers on the market. The baijiu sector's valuations pre-Chinese New Year holiday were extremely high, so selling pressure was building up. But still, the sharp rout has dampened investor sentiment. Another star company, battery maker CATL, plunged more than 8%. And the healthcare sector, also among the best performers pre-holiday, dropped 3% today. Analysts say triggers for the reversal also include concerns over tighter monetary policy from the central bank. Bucking the trend, home appliance makers were up. Roban rose 4% after posting a 5.3% preliminary earnings growth for 2020. Midea was up 4.5% after announcing plans to repurchase as much as 14 billion yuan of its shares. That's a market wrap in Shanghai. Let's head over to Hong Kong with Michelle.
Thanks, Lihuan. Well, let's look first at the budget that was unveiled here today. Finance Secretary Paul Chan said the city will run a much lower budget deficit in the coming fiscal year. That says the economy is expected to recover from its longest recession on record. It's expected to grow between 3.5% and 5.5% this year. Pandemic relief measures were, of course, in focus. The headline announcement being 5,000 Hong Kong dollars worth of vouchers given to permanent residents. Looking at the market reaction, though, the Hang Seng Index plunged or is heading towards the close around 3% lower. Why is that? Well, on the revenue side, stamp duty on stock trading will be raised only to 0.13% from the current 0.1%. But the announcement was enough to send shares in stock market operator HKEX down 11% at one point. Even as it posted upbeat earnings today, it was the bottom mover of the index. Looking at other factors shaping trade today, technology stocks are still under pressure from the recent gains in U.S. Treasury yields. There were bright spots, though, on the index too. One of them, Macau gaming stocks. Wynn Macau led those gains up around 4%. The gambling hub is lifting quarantine restrictions on visitors from the Chinese mainland. That's it for me in Hong Kong. Well, let's get more market action now in Tokyo.
Thanks, Michelle. Well, the Nikkei share average closed below the 30,000 milestone today. This for the first time in 7 sessions. Investors booked profits, especially in tech shares following a drop in the Nasdaq. But leading losses today in Tokyo was index heavyweight SoftBank Group. SoftBank Group plunged over 5% in Tokyo stock market today. This also comes after a Bloomberg report about a SoftBank Group planning to expand investment in biotech shares. This investment could sum up to be billions. SoftBank has already made a lot of investments in biotech and healthcare stocks, but mostly in startups, and investments were mostly through its Vision Fund. But this is a plan to invest in public biotech shares through a different fund. But despite that, SoftBank Group shares tumbled 5%. We also saw sell-offs in chip-related shares as well. Meanwhile, on the other hand, pandemic-driven stocks gained as the vaccine rollout kicked off in Japan last week. For example, we saw department store Isetan Mitsukoshi leading gains on the Nikkei, jumping 5%. Other mall operators like Takashimaya and J-Front Retailing also gained over 4% in Tokyo markets today. That is it from me in Tokyo. Back over to you.
Thanks for those updates. Yoshida for us in Tokyo, Mr. Hennessy in Hong Kong, Wang Lihuan in Shanghai.